The bears were able to reverse the FOMC, yesterday's FOMC bar. However, they were unable to close below yesterday's low, so it's a subtle sign that the market's still in a trading range, and more likely it's going to bounce and go sideways here. I still think the market will ultimately get back up to here, but there is the risk that you get the downside breakout. So on the open, we gap down. Bar 1, bear bar, probably buyers below. And, you know, we're going to bounce, probably test the moving average. Strong enough breakout, we may go sideways. Bar 2, doji. However, it's a bear bar, it's a bad high one buy. So probably more sideways than straight up. Outside down, bar 3, it's a give up bar. It's on the 15-minute chart, bear bar closing on its low. Probably always in short, okay, swing buy, stop above, betting on a trend from the open, and that we may get somewhere down here. Bar 4, consecutive big bear bars, 4 consecutive bear bars, 2 closing near their lows. Probably always in short, going at least a little bit lower, around the 50% pullback from here to here. So there's 50%. Trying to pause at 50%, but a lot of bear bars. Sell the close, probably going lower. Give up bar, sell climax, tested this high, so filling this breakout point gap. Trend from the open, first low is probably going to fail, but the risk is big. It's probably sell to close. A lot of bears would probably get out a couple ticks above the bull bar. Some bears will get out on this close, betting on its exhaustion. You can call it a parabolic wedge, 1, 2, 3, but it's too tight of a channel. Follow through bar, again, sell the close, and most bears would probably get out above this bar. Although tight enough channel, the first low up may fail. And it triggered, but bears ended up selling more. Still going lower, and another bar. It's parabolic, climactic. We're so close to this low, we may have to get there. And at this point, I think realistically, for most bears, it's hard to stay short even above this bar. Even here, it looks so climactic. Stops far away. Too much risk we test up here. I think most bears would get out, and that's why it kept selling off. It forces traders to chase the market down. And even here, quite a few consecutive bear bars, but still first low is probably going to fail. It's still a hard place to sell. And if you did get out of shorts, it's hard to get short again. Same thing here. So hard to sell this close, stop up here, because there's too much risk of that, and too much risk will test up here. A lot of bears will get out above this bull bar, and you can see it just kept going lower. So possible exhaustion here, but strong enough bar we may go for second leg. Breaking below this low, strong enough breakout, we may get another second leg down, but it's parabolic. You're going to test the moving average, several consecutive sell climaxes. Most bears would just get out of shorts here. And too much risk that bulls that bought here or here, they'll scale in lower and probably make money. Micro double bottom, I think a lot of bulls would definitely get out above that bar. A lot of bears would. Bulls may buy, use a tight stop, or use the stop measure, move down. Breakout, testing this high, so scaling bulls bought here, scaling lower. Other bulls just bought and scalped out up here, betting on a trading range. Low 1 short, you can call it it's a low 2 on a smaller time frame, but 3 consecutive bull bars, not at the moving average, probably buyers below. And you can see another big bear bar, another breakout bar, probably going to be exhaustion. And again, bulls made money. Buying here, buying lower, buying this low, scaling in. They're probably going to make money buying this low. And there you go. So tight bear channel evolves into a trading range. You can call it a triangle here, 1, 2, 3, 1, 2. Possible final flag here. Broke to the downside, reversed up. Is this a higher low major trend reversal? It's probably more minor. It's a higher low, and that's great for the bulls, but the bulls need a stronger trend line break. Too much risk, we're just going to go sideways. So even here, break above the moving average, but 20 gap bars short. probably going more sideways than straight up. So not a great area to buy. It's high in the range, probably not going much higher, and the risk is big, which means traders will sell. And bulls, they're trying for a higher low major trend reversal, 2 legs up, 2 legs down, maybe call it a double bottom, higher low major trend reversal, and you can buy here, but again, not great signal bars, probably going more sideways, and very well may fall below this. But the bulls that did buy there, and you can see what happened. So now we have a wedge, 1, 2, 3, call it a double bottom here, double bottom here. Some bulls will buy, others will wait for a second leg down from here. Strong enough surprise, may get a second leg down. And you can see we're just really going mostly sideways. So what about here? And by the way, if bulls did buy here, a lot of bulls, when they buy and they start to see this is disappointing. If you sell here and you start to see this is good. And traders will generally tighten their stop. So bulls, they want a strong breakout bar like this so they can tighten their stop. They want a strong breakout above the moving average and follow through. So a lot of bulls that bought here, during this bar, as it starts to reverse down sharply, they're going to get out quick. So same thing here. They're going to get out below that bar and minimize their loss. Bull bar, but 3 consecutive bear bars. The bears are trying for a bear breakout and trend resumption down. And, they want something like this, a measured move down. Probably won't get it. Some bulls will wait for a second entry buy, such as that. So it's a reasonable buy, stop below, and you get follow through. Doji, but probably going at least a little bit higher, and there you go. So the problem with taking these kind of buys, one thing to point out is you have to usually sit through swings, and it doesn't immediately go your way. So if you buy here, that's a pretty deep drawdown, but you have to trust your stop. So some bulls will buy, they may scalp out as this bar starts to hesitate at the moving average, which is one reason why this sold off. If you didn't get out up here, bear, you have to trust your stop. And a lot of traders, what would they do here? They'd certainly get out below this bar. Trading range, big tail. Most bulls probably just better off exiting. And you can see and another thing to point out, I didn't realize, this is also 14:35. It's very late in the day for a swing trade, so this is not an ideal stop entry. There's 6, 7, 8 bars left in the day. It's just not enough bars to really. It increases the chances that you're going to go more sideways. So, not a great place to buy.